At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Mike, maybe you can elaborate a little bit more on why business owners would look at an infinite banking policy at all.
It's a great question, Kathleen. I think that a lot of business owners think, well, I don't need life insurance, and therefore they're dismissive about infinite banking because they don't understand that life insurance is simply a platform to execute the process of proper cash flow in their life. It is a vehicle. It is a financial vehicle that has multiple benefits within the Income Tax Act, number one. But number two, it's the only financial vehicle that allows you to, for example, to shelter and create a large tax-exempt account inside your corporation. So I think that when people think, oh, well, life insurance does this, this, and this, yes, it does do all those things, but it also does a lot of other things, such as be able to reduce your tax bill, be able to create liquidity in your company when you most need it, whether that's on death or whether you have already accumulated capital inside a life insurance contract and now you're going to use it. There is no other way that you can take risk off the table, get a moderately decent rate of return, although this has got nothing to do with rates of return. But if I'm going to put my money in an environment, I do want it to grow at least a little bit.
It sounds like life insurance is not the point.
Exactly. It is a financial vehicle that allows you to do this, 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 and this, but that's the only financial vehicle available to you in Canada that can.
So you really have to be open to all the things that these infinite banking policies can do for you personally and for you in your corporation then.
Correct. One of the board members of the Nelson Nash Institute, which is carrying on Nelson's legacy of teaching, explaining, and instructing advisors on the infinite banking concept, he says that insurance is the platform, but banking is the process. So when you think about all the things that you want to accomplish with your business, creating tax efficiency, doing more, having more available capital, not losing the opportunity cost, life insurance is the only vehicle that allows that. But as long as you're thinking about insurance being an insurance policy and not all these additional benefits, which was really infinite banking is about reverse engineering your entire life. So
I guess it boils back down to being your own banker within your corporation and controlling the banking function for you and your corporation then.
Absolutely. And so what I like doing is saying, okay, well, what are the other assets that will allow you to control the function of banking in your life? I'll wait. And what they usually come up with, and their accountant says, well, there's no other asset class that will allow you that kind of efficiency in your company in Canada. Right. So we're back to square one about saying, well, I don't believe in insurance. Well, it's not a religion. It is a function. It is a tool. It is a process of being able to control that function in your life. Now, I would love for it not to be insurance, but the reality is that you're not going to get healthy eating ice cream. You're only going to get healthy eating the proper diet. So same thing with your financial diet.
Yeah, I mean, it doesn't really need to be even more complicated than it is when you buy it in a personally owned. So personally owned, I love it because it gives me a big line of credit, allows me to create a tax-free income in retirement. Yep. I get to control my banking function. I can use it to purchase real estate and other assets. So it's really just it's like TFSA on steroids. I often talk about it being like a TFSA, but you're not limited to the $6,000 a year. And similarly, you can't get a TFSA in a corporation, but this is achieving the equivalent, something similar.
Yep.
Sorry, Mike. So let me remind everybody that there's only 4 tax shelters left in Canada. besides your principal resident, well, at least for now, we all know that government is talking about it. We might be losing that or the capital gain rate from 50 to 75% eventually, but it will happen. So principal residents. The second one is TFSA, but again, the amount is very small and limited and not available for the corporation. And the third one is lottery winnings. And the last but not least is life insurance. Really, other than these four things, nothing is actually available in Canada. So think about that again.
Yeah. And what I love is there's a mindset of integration in the Income Tax Act. So if you're going to have a benefit personally, you're going to have a benefit corporately. So all the benefits that you have from a corporate or personal life insurance, you're going to have in a corporate life insurance scenario. And it's this theory of integration that your tax rates are going to be as sheltered personally, corporately, right? Death benefits are going to be preferred. There's a few nuanced rules with that, of course, as we've discussed. But at the end of the day, to Mary's point, you can't get a TFSA in your corporate name. And if let's just say that you had $100,000 of extra income, and if you're taking that personally, you're paying maybe what, a 30, 40% tax rate on that income. So now you have $60,000 of after-tax income left to contribute to a policy. Whereas if you're thinking in British Columbia, the 11% tax rate on small business earnings on that 100,000, I can invest or I could shelter or I could contribute, but the premium that I have left to be able to contribute is 89,000 at 11% tax. Now, compared to $89,000 over a series of years compared to $60,000 over a series of years, what's better?
Right.
And this is actually, if you know the IRS tax code, the Income Tax Act in Canada is superior for corporately owned policies than the IRS tax code in the States. So we actually have a benefit here in Canada to use a properly designed life insurance contract that is designed for cash accumulation rather than a death benefit. Again, think reverse engineering. We get a lot of benefit from doing that here in Canada for sure.
Yeah. But again, if corporate owners is thinking about that, should think about it sooner than later, because again, the government is talking about changing the tax rule. The CDA may be gone eventually, who knows? Or there's restriction, not 100%, or something else. So, it's time is limited. Maybe the next few years, it will be a change. There will be a change just because government needs money. So they will do everything just to cut, just to change the tax rule to benefit them instead of.
We have to be smart and use those tax shelters that are available to us.
ASAP, exactly.
And the lottery is, I'm not doing so well so far on the lottery winning. So I like this.
Zero luck, but at least we are. Don't buy a ticket in the state because in the state it's taxable.
Yeah.
So we still have a little bit of benefit here.
I think at the end of the day, Kathleen, I'll wrap with this on this point is that there are benefits available to you as a business owner in Canada. Why aren't you using them?
Yep, absolutely. And we have to use the advantages that we have. We have to use the tax rules to our advantage. And this is a big one.
Yeah.
So, okay.
100%.
Okay.
Great.
IBCanada Group, your independent authority for information on the infinite banking concept.